Welcome to TradeNBI.com. This is Jonas Reports for the 8th of September. And, Friday's action, for the option expiration, we hit new highs, faded off those. We're coming back a little bit here in after hours. Still consistent with our magenta over yellow, so no shock there. Shorts are really fairly weak within this. We have been in this DOC spread where we seeing that we're just sideways trading. The dip of the orange going back below red, though, was a nice reset for it. Now we're caught in between the zone. The key is, does orange remain in there, and do we start to develop a bias? And we don't really have that happening yet. We still have modest from short-term buyers in the cyan. So, we had new fund money coming in, it's starting to get applied. But they make it back and forth. We're still, look at how tight this range is getting. It's going to have to explode outward from there when we get this kind of compression. Usually you then get your expansion going back out of it. And that's typical. The shakeout, still weak. We're not making new highs relative to the previous ones, and we're still maintaining the same space. So that's got to break the previous range since we reset with moving into the negative. Until that happens, you know, you're sort of riding on a knife's edge as far as stability goes. From an NQ standpoint, it's a bit different. We've had a double reset within there, better improvement from a shakeout. So the Nasdaq's looking stronger relatively, even though it's still behind. From a new high standpoint, but that allowed the S&P to catch up. And that's pretty consistent with a much better range between the magenta yellow. But you do see short activity rising significantly within that. Not a threat at this particular stage, but that can change fast. You can see that Treasury is finally breaking out of that range, and the suggestion that more money applying into there really driving it, and that could be an interesting setup. Impacting strength of the market where people are moving to more known space rather than the uncertainty of how the economy is going, that kind of thing, what the Fed is going to do. Oil did what we expected from our MBI weight spike that took place and the continued drop. We expected to move to the zero, and that's exactly what happened. Moving back up to the 23% right now, but really still needs to break that 60 range. If it does, I think that you end up with a potential for much stronger economic growth just built into that equation. As I said, what we're going to have to be watching, and I may have to find a way for us to view that, will be electricity costs and the bifurcation between what electricity is moving at versus general fuel costs, because it's usually they were linked. But now you're seeing with the data centers and that skewing where power bills are rising disproportionate to energy costs, and that becomes a significant factor. From a euro standpoint, they still love the euro. They think the dollar is done and that the U.S. economy is going to fall apart with tariffs. All that's still undecided, and because of that, gold has been a prime mover now. Um, just catching up to, I think, what the moves have been from earlier, where we saw crypto making a move, and you had a much more lagged experience from gold. Now gold is caught in fire, particularly as they've seen activity from more selling in the Bitcoin to rotate into ETH and that, and it's still looking difficult because any pivot down now, I mean, you're in a weak spot. You're headed to the 0% with the MBI weight spike, so put you down in the 107 range. When we look at ETH from there, just holding on, but right at the precipice of that support here of 76%. But it is support simply because you have magenta over, but relatively close, and just showing a lack of enthusiasm, I think, is the best way to describe it. There's no new catalyst. We had all the talk about the legislation and things changing that way, and once that hype was all done, yeah, it all faded apart. So we had to push up to the highs, and remember we talked about all these positive extremes, went over it, started to lay them out, and there you have it. We filled right back in, with a little bit of a bonus. Took it all the way back to the beginning of the original setup. So that's where some of those yellows, when you see weakness like that, then I start to move into the yellow candles because they were right on the precipice of the threshold for the extremes. Um, but it usually takes some kind of follow through. And that's where that hit. And then once it happened, we ended up starting getting magenta back and forth, staying above yellow, even with MBI white. And that's usually a short cover rally. And that started right in this place under the 50%. And once magenta clearly broke above, that's the breakout that we've seen. So it's all pretty clear. In fact, I'll enlarge that so that we can get a better view. There we go, and that becomes pretty straightforward. So those are the things to look for when you're kind of measuring how that's going to go, because you can see the direction uh, where things are about to bend, and particularly it's usually counter to what price is doing, which that is the most relevant one, because then you're able to catch much lower into the strain. This is where we are in the current EU session. Had a nice little bump, but it's sort of giving back a little. If we return back to Friday, as you can see, there it is, the clean move, and it was pretty straightforward from the 5 minute chart. Didn't really have any questions about that, and then it just sort of remained sideways, and then you ended up with the MBI white spike, but magenta over, and that led to that short cover rally at the end of the day. And that was just the repositioning of new options and setting up for the beginning of the new week. So all good stuff, and still plenty of volatility within the broader aspect of it. So people are starting to get back into the swing of things now. It seems that holiday period is over, and we're going to really start to get some clarity, I think, because the Fed's going to have to make a decision, and that's going to determine a lot about how people view where things are going there. I think the worst case scenario is they do nothing, and that would probably cause the market to freak out a little bit. So we'll see if it plays out that way. The politics, it's outside of actual, any metric. It's just who's got the more power at this particular stage. Is Trump able to steamroll them, and will he get his picks? I mean, again, that's still in the court. See, all this stuff is just delayed things. Where we talked about at the start of the year, if he was able to move those things forward earlier, we would have seen results by now. But with all the delays that were pre-baked in, the earliest you're looking at is the first quarter, second quarter, more likely of next year before you start to see some impact from the investment things, because those were much slower activity, and really the only way you can get a jump in the catalyst is oil dropping. And it's in a better spot than it's been, but could be more advantageous to growth. So we'll see. As always, anything relevant, I'll put it on our team chat. Have a good one. Trade well.